the July 1st tax reckoning. What you need to know: July 1st, 2025, ushered in a wave of tax policy shifts across the United States. This date, significant as the start of the fiscal year for most states, brought a fresh set of financial realities for both individuals and businesses. The changes were widespread, touching everything from the pump to your paycheck, and even your online activities. Let's begin with a look at excise taxes, which saw some of the most prominent adjustments. This is a significant expansion of the sales tax base. Maryland also saw increases in vehicle excise tax, cannabis tax, and sports betting tax, along with a new tire fee and the extension of the state's 6% sales tax to vending machine sales. Colorado expanded its sales tax base to include interstate telephone and telegraph services, reversing a previous exemption. Kansas discontinued state property tax levies for specific educational and institutional building funds, now funding these through the state general fund. This represents a shift in how those services are financed. Conversely, they created a new sales tax exemption for medical marijuana for lower-income individuals. New Mexico saw its cannabis tax rate automatically increase from 12% to 13% as part of a multi-year phase-in. Staying informed about these changes is crucial for financial planning, whether you're a consumer or a business owner. Tennessee began taxing vapor products at 10% of the wholesale price, and Washington notably increased its estate tax exemption, but established a progressive rate structure with a top rate of 35% for estates exceeding $9 million, making it the state with the highest estate tax rate in the nation. In Iowa, unemployment insurance tax system reforms reduced the taxable wage base and lowered the maximum UI tax rate. Alabama increased its state excise taxes on gasoline and undyed diesel, and the income tax exemption for overtime pay expired. This means more of your hard-earned overtime is now subject to state income tax. In California, the cannabis excise tax rate jumped significantly, and tobacco product taxes other than cigarettes also rose. Gas tax rates were adjusted, primarily increasing the state excise tax. Illinois imposed higher taxes on sports wagering and dramatically increased the excise tax rate on e-cigarettes from 15% to 45% of the wholesale price. They also expanded the definition of taxable tobacco products to include certain nicotine products. And if you're using short-term rentals, prepare for the hotel operator's occupation tax to apply to those as well. A particularly noteworthy change occurred in Maryland, which applied a 3% sales tax to various business-to-business services, including data and IT services. For those watching their grocery bills, Mississippi brought some good news by reducing its state sales tax rate on groceries from 7% to 5%. However, the state's excise tax rate on gasoline increased by 3 cents per gallon. Electric vehicle owners in New Jersey will now find their purchases subject to the general sales tax, as the exemption for zero-emission vehicles was entirely eliminated and registration fees for EVs also increased. Hawaii introduced a new road usage charge for electric vehicles, either 0.8 cents per mile or a flat $50 option for registration renewal. Beyond sales and excise taxes, other areas saw adjustments. Property tax changes were less common but impactful where they occurred. Finally, some states adjusted to new markets. These July 1st tax changes underscore a continuing trend of states adapting their revenue streams to evolving economies, new technologies, and shifting social priorities. Money